Good day, guys. Welcome to Forex Walker. Welcome to episode 51. On this episode, we're going to be talking about the market projections or price action. So, here we have the euro pound. In this euro pound, we need to move back a little bit. In this euro pound, we had our first touch. Our second touch is right here. Uh, Let me bring it. Our second touch is right here in this primary trend line, or what I call the weekly time frame trend lines, or uh, the weekly time frame channel, or just a primary channel. When I say the weekly time frame, this is the daily. I'm talking about the main channel. This is the weekly time frame channel, and all these channels that are aligned within this larger channel are called, I call them the daily time frame channels, or what we call uh, secondary channels or secondary trend lines. So this is the second touch from the first, and here we have a third touch. Normally, the third touch we expect it to manipulate before it takes off. So this is the manipulation, and at the moment, the euro is macroeconomically bullish, but because it is correlated back to the Danish krona, we expect it to take the direction of the Danish krona. I've taken many trades where the euro is bullish, but it normally takes the direction of the Danish krona. So even though here we have it reversing backwards towards the trend line again, normally in Wyckoff schematics, when you get the manipulation, we call it the spring. And when it comes back to the trend line, we call it the test. So that's just what I'm expecting that should happen. So here we did not come all the way down to the 50% fib. We rejected from the 38.2 and went back to the previous shoulder where we actually manipulated into. So this is a trade that will take a while. It will actually move lower and lower. I don't know up to where, but actually the euro is actually bullish macroeconomically. So the pound will be taking off. When will it take off? I believe this is the time where the pound will take off. So here we have the euro AUD. We are not going to be trading the euro AUD, but where we have a long-term investment interest in it, where, as I was talking about the euro, the AUD is getting weaker and weaker, and the euro is actually giving us that turnaround because of the Danish krona. But macroeconomically, the euro is actually bullish. So, so let me show you what I'm talking about here. As you can see, it went. Let me try to pull this trend line properly. It went all the way up to the 50% fib, and then it turned around. It went back to test the uh, the 23.6. So this is the reason why I'm expecting it to actually move backwards. So my intentions is that we go back to one of these previous shoulders. So let me show you the previous shoulders. Let me show you the previous shoulders. The first previous shoulder is here, and the second previous shoulder is here. So we're expecting to reject from one of those previous shoulders. As you can see, we had a market projection that was drawn a long time ago here, where we dropped from up here. dropped all the way down here and we came back here. It's supposed to be here or there on those either or on one of those previous shoulders. So those are my expectations. And in that case, we're going to be dropping all the way down here. And as you can see, I'm breaking below it here because we have our first touch here, our second touch here, and we're expecting to manipulate uh, this primary trend line or this weekly time frame trend line. So that's the reason why I'm expecting to manipulate it. Uh, uh, the Australian dollar and the NZD, I believe I was showing you the hedge inflation trade on both of those currencies. Uh, so even though the AUD had just jumped into the interest rate cutting cycle, I'm expecting it not to take that long in that recession. I'm expecting it to turn around. And the NZD, I believe it is already exiting the recession. So another currency is the Euro ZAR. The Euro ZAR. So in this Euro ZAR, we've been having this economic projection for a long time. The Euro South African Rand. So what is happening here is that we have a first touch, a second touch here, and the manipulation. So we're expecting this market. We're expecting that the okay, the euro is actually showing us that the it is exiting the recession. But the only thing that in terms of inflation, inflation is doing well. So we just had a tiny pullback in the inflation, and I believe that the South African rand is actually exiting the recession, and it had already started the boom bust processes. So because of that, there's a high possibility that this market may not turn around, especially because we're expecting the euro to take the direction of the Danish krona. So because of that, we're having conflicting signals, and the turnaround from this move might take longer. But at the moment, I'm expecting the South African rand to give us a pullback. I am expecting it to get weaker. And when it does get weaker, we'll see between the euro and the South African rand which currency is weaker than the other. And that's where we might get this pullback that I'm talking about. And once we get that pullback, we'll be looking for the two shoulders here, either this shoulder or that shoulder, where we can get our pullback so that we can start selling the South African rand. The reason why I'm expecting this is because price action wise, we got to the 50% feet, and we're supposed to be reversing up here into what we call an auto block. I just mark it with shoulders, previous shoulders. In fact, we have a third shoulder here where the market might decide to turn back into as a pullback. So the market actually decides where it wants to pull back. So I always tell people that when you trade safe with a smaller lot size, you cannot tell where the market will turn around. Wherever it turns around, that will be the point where I'll be selling. You can either wait for the market to turn around and enter the market late, or you can enter the market first and risk your money. In this case, I'm going to be risking my money three times, which is this previous shoulder, or that previous shoulder, depending on what the market will be doing. So the only issue when we are trading long term is that most people you can actually get in once if you have a huge account, and you can allow the market to pull, to give you a pullback all the way up here, if you can handle it. And if it turns around somewhere up here, you can enter the second position with a larger lot size. Most of the time when I enter the market for the first time, because I don't know what the market is doing, I use a smaller lot size. And when I see that the market is actually turning around, that's where I enter my second position. So that's how I normally trade. So we're having issues with this market turning around, and I'm having conflicting signals because I want it to turn around so that I can sell it. And if it doesn't, the you know, I will be losing because the swap that I have, as you can see here, I'm saying short only. The swap that I will be getting here is at 50%. So yeah, this is a trade that I've been waiting for some time. And these are the euro trades that I also have that previous trade that we had with the pound SGD and the pound NZD. So this trade is actually doing well since we spoke about it. We had that, remember, it did not touch this primary trend line or the weekly time frame trend line. Remember this huge trend line that we have, first touch, second touch. We are yet to have a third touch. And down here we have our first touch, second touch. We're expecting that beautiful manipulation before we exit, which is the third touch. It might manipulate from up there. But what happened is that from this first touch, second touch, third touch, from this manipulation, I was talking to you guys about entering this market. Remember, this is the secondary channel, and this is the primary channel. This one here is the primary channel or the weekly time frame channel, and this is the secondary channel or the daily time frame channel. Remember, we did not change our time frame, we're still on the daily. So this is our daily trend line where we had a first touch, second touch manipulated, and I held the euro from that part. But because of uh, the pound decided to introduce an interest rate cut that I was not expecting, and because of that, I actually had to compromise and cancel the trade that I was trading. The swap moved all the way up to 3.32 uh, points, which are a loss, uh, uh, a swap that I had to pay for holding the currency. As you can see, the currency never came back to this level, but at the moment, the euro is actually about to turn around so that we can get our rally, base rally. This is the rally. Remember the rally? This is the base moving sideways rally. This is the second rally that I was talking about. This is the second rally that I was talking about where we are expecting to get our third touch, one, two, our third touch up here, which will manipulate. So that's the target that I was having. And this trade will continue to play around like this all the way up there. Remember, we're trying to exit from the recession, even though the pound had given us the a hawkish interest rate cut because the currency was not really suffering that much. That's the reason why it never became bearish like other currencies. When we start an interest rate cutting cycle, the currency becomes bearish, but the pound did not do that because the currency was doing well. But they had to introduce interest rate cuts for the GDP in that country. So thank you guys for this price projection. We're actually doing something awkward because we are starting with price action and then we are moving into the market fundamentals. So I'll see you guys on episode 52.